Hello traders, welcome back. This is my analysis for the Euro versus United States dollar, in which I'll discuss my point of view regarding the graphical analysis and the opportunities for the week ahead. If this is your first time here and you'd like more videos like this in the future, make sure to subscribe. Now I'll begin with the weekly chart in order to get the direction and then continue with the daily chart for further information and for the actual trading opportunities. Now, on the weekly chart, the bias is bullish, and that's because of this obvious ascending structure. Price closed above this 1.2288, which again gives credit to the bulls. Another thing to note is that price closed around the psychological level 1.23, just a few pips under it, but again, a thing that gives credit to the bulls. The correction is narrow and horizontal in comparison, for example, with this one here. So another point for the bulls. I can see these higher highs and these higher lows. And the last candle has a low that is actually higher than the previous candle's low, and actually it wasn't able to visit the opening price of the previous candle. So again, an argument that the bears don't have enough force to drive the price down and that the bulls are in control. Now, let's take a look on the daily chart. On the daily chart, the bias is bullish, and that's because of this forming ascending triangle and because of this piercing pattern. Now, note, this pattern is not the strongest pattern, but is a bullish pattern. So now, let's check the actual trading opportunities. The first opportunity is available, so to speak, as long as price is above this 1.23 psychological level, 1.2296 on the chart. And another buying opportunity occurs if another bar or another candle closes above this 1.2335 level, preferably above the high of the piercing candle. For both of these options, the aggressive one, the first one here, and this conservative one, the price target is here, just under the psychological level 1.25. So 10 pips, 20 pips under this level. There are also other two opportunities, and these go like so. The first one is the one in which price confirms this 1.22 in a clean manner. So what I want to say, it looks something like this. So the tails, the lows will stop around here. I wouldn't see a low or a tail under the level. So in this case, after such a clean confirmation, I would expect price to confirm this as a support, okay? Or I would wait for a candle to close above the line of this ascending triangle, or in case of a false break of this level, so a hammer or a takuri, again, I would expect price to close above the level this time. So yes, the tail can be under the level, but the body of this hammer or takuri has to close above the level. In this case, I wouldn't wait for another bar to close above this line. This configuration will be sufficient. So for both trades, the one in which price cleanly confirms the level or this second scenario, the profit targets are like so. The first one just under this 1.2335 and the second one under this 1.2447. Another thing to note is that this is an inside bar pattern, so the way in which it will break confirms the direction, but be aware of the Hikaika pattern. So that's all. Thanks for watching. If you enjoyed this video, I made another video about the Australian dollar versus United States dollar. Remember to like if you enjoyed the video, subscribe if you want to get more videos like this in the future, and comment to let me know what you think and what you'd like to see in future videos. Trade well and take care.